started with a nice gain, can't hang on to it, and we're starting to get more of a pandemic feel to the trading activity today. Didn't help the comments from New York Mayor Bill de Blasio about possibly revisiting lockdowns. Is that what you think is going on here?
Well, Kelly, although we're very optimistic and great news about the vaccine, we've got some struggling coming ahead in the next few months. And with that in mind, I think we have to continue to look to see what's worked. When you look at flows so far this year in the ETF area, there's been a lot of flows in technology-related ETFs, thematic ETFs, and also actively managed ETFs in certain sectors that are really specific to working from home. When you think about the average small business in the U.S. today that has had to adopt to this new environment, they've really done well. And technology companies have continued to gain. So as Bob Pisani mentioned earlier, it's the DocuSigns, the Zooms of the world that all of a sudden are shining today.
Yeah, well, it's Peloton also up about 6%. Kevin, right. Would you echo that? I mean, what do you think is going on here?
Well, I think a large part of what's going on is that it's kind of a sell on the news type of day in some respects, because the vaccine has been priced into the market. We have also priced in earnings for 2021 into the market. But what we haven't yet priced in is what's going on with our labor market. Our labor market is slowing down immensely, and you saw that last week with the jobless claims. And I think that as we move into 2021, we're going to have more companies paying attention to their profits, and they're going to try to become more efficient. And so in that efficiency, I think that you're going to see jobs lighten up. There's going to be more layoffs. However, you're going to see potentially the upside in earnings because of companies becoming more profitable and more efficient.
So what would you do, Kevin, with the market? And you can also kind of speak to the fixed income side. I mean, last hour we were speaking with a number of different guests about their bullishness on commodities and even certain value stocks, and it's predicated on this reinflation, if not inflation trade. The bond market is totally shrugging it off. I mean, the 10-year is kind of back up towards 1%, but we have as much negative yielding global debt as we've ever had, even though we're ostensibly much better off today than we would have been, obviously, in the depths of the pandemic. What gives?
Well, I think you make a very excellent point. We have $18.4 trillion worth of negative yielding debt globally. So it's really going to put a cap on the yields that we see in the fixed income market, especially on the longer end of the curve. Plus, with the Fed meeting and with the idea that the Fed is actually going to pivot as far as their QE program and their buying of shorter term treasuries and move further out on the curve. So I don't think that the bond market is telling us that, even though yields may be trying to rise here in the U.S., because there's so much negative yielding debt globally, that there's going to be a cap there. And I think that the Fed is going to make a very slow pivot away from the short end of the curve to the longer end of the curve.
Shepard Smith here. Thanks for watching CNBC on YouTube.